Right, hello and welcome to the Trade of the Day for the 1st of October. My name's Tom. I'm a senior trading analyst here at Trend Signal, and I want to run you through two intraday trades that we took this morning on the German 40 market and came out at the end of it with about 130 odd pips. For a little bit of context, Trend Signal, we've been teaching people to trade since 2003 based out of the Cranfield University Technology Park. So let's jump straight in. Luckily, these are quite easy trades to manage, so not too much to discuss really at the start of it. Now, there's a 5-step process we use to tell if a trade is worth taking in the first place. I'll go through them one at a time. We first look for the arrow flip and we check where the arrow position lands. So when it flips, we need to start looking. Doesn't mean there's going to be a trade, but it's time to wake up and pay attention. When it flips, where it places, it's outside of the bands. This means it's a high energy trade. The market has been stretched recently, meaning that we don't need quite as much structural support as we look for in kind of like, say, like a standard opportunity, which just has normal energy. So we've stretched the market out. We then need to look for the vector averages. These have turned to green, these red to green lines you can see on screen. I'll zoom in a little bit to make it a bit more clearer for you. These green lines here. We then look for the candle position. Now it's outside, so we just need to be in the top half of the channel, which you can see between this blue band and this black band here. So we're well and truly above. We then need to look for the R ratio on the left. This tells us if the market is wide enough so that even if there's a good signal, the move that we're expecting to get out of it is going to more than cover the costs and give us a little bit extra in the kitty. In this case, it's green, it's plus 20, so more than fine. And finally, if this wasn't an explosive trade, we would have to be in line with the trend. We don't have to, but we are in line with the trend. It's an extra string in our bro telling us this is likely to be a high profitability entry point into the market, I guess. And what happens is, as the name implies, explosive. We move in an explosive fashion. We do eventually find some resistance pushing sideways before we come back down. Momentum falls out of the trade. You can see this by the green to red change colors on the vector average lines. And eventually the candle hits the black arrow. This takes us out for our ultimate exit. Now, some people who were managing this a little bit more closely would have come out somewhere between the top at 944 instead of the exit at 958 when you already knew the trade was turning around. But really, if you're brand new to this, you can use the black arrows. It means your worst possible result on this, just following the rules, is about 50 pips worth of movement. And what we then get is an arrow flip, and we can look for a new opportunity. However, we know that we don't take this sell opportunity. The arrow's inside. It means it's low energy. It means we want more structural support. Not only are we trading against that long-term trend, but because it's inside, we need the candle to come all the way down to the purple PE2 line you see by my cursor. Essentially what this is doing is the system is detecting that this is more of a consolidation as opposed to a move that's likely to sustain itself towards new lows. So that's exactly what happens. We come down, we test the middle of the channel, bounce back up, hit the arrow, flip over, and we reposition ourselves looking for a long trade. Now we get a standard trade here. The market isn't overly stretched. As I say, it's just gone through a small period of consolidation. It means we do have to be in line with the long-term trend this time. But let's go through the steps in order. Arrow inside, green vector averages. Candle needs to be above the purple. R ratio needs to be positive. It's 41.2. And finally, we need the trend to be in our favor. It's blue, which means it is. We will re-enter at this point, having dodged the consolidation period. And if you follow the black arrows the whole way up, you actually get quite a nice result, exiting here at 1054 for about 80 to 83 pips, give or take the fractions. Put that together, it's 132 pips out of this market. Now, if you're trading on a beginner account, £1 per pip is £132 for your time. £3 per pip, 397. At £5 per pip, a little bit bigger, a bit more intermediate, at £662. And in total, you've been trading the markets for just over an hour and 10 minutes or so. If you want to see how we identify these trades, how we manage them, how to use these indicators, and also see how you can follow and trade us live for 10 hours a week, we're doing a live session tonight at 7 o'clock. Come along, we'll share everything you need to know, and hopefully we'll have you intraday trading before you realize. Hopefully we'll see you soon. Bye-bye.